All right, up next we have Donny Gilbert giving us a broker update about capacity in the rest of the country. Donny, what do you have for us today?
Well, today, Zach, I brought you, it's the drive-in tender rejection rate map. But this map's a little bit different. This is the change over a 1 month period. So before we've gone through, we've looked at the reefer maps, the drive-in maps, but this is looking back at 30 days and what's happened from 30 days ago to right now. What markets have increased and what markets have declined.
So tell us what does the blue and red mean again, just for those that don't know it?
We'll start with the white. The white markets have stayed pretty well neutral over the 30 days. So the tender rejection rates haven't really gone up or down. As we go, as the tender rejections rise, they start turning a blue, and of course a darker blue the more they've increased. If they've declined, they start turning shades of red. The darker the red, the more that they've actually declined. So this tells us really what's happened over the last 30 days. Have markets increased, decreased, and this is a good way to look at it versus just looking at your daily maps.
So what markets do the brokers need to look at today?
Well, we'll start out in the southeast just because I saw Florida turn a little bit of blue. It's impressive to see Florida picked it up a little bit. But you know, of course, Florida's still a huge backhaul market. It's a backhaul market 11 and a half months out of the year.
Sure.
But, you know, you've seen it pick up here a little bit. You've seen a few spots here on the coast here. These have turned red. They've gone down in the last 30 days. Of course, we do know the storm effect that came through here. We got a lot of trucks that moved into this area, a lot more capacity. Therefore, tender rejection rates were pushed down. So in 30 days, these have actually declined. Okay. But here through the Midwest, this is where we've seen a lot of our growth. And through all the way through kind of part of the open plain area, these tender rejection rates have increased, while when we get out in the open plain area, these areas have actually declined. So these are kind of getting down to almost a backhaul market. This is where now you're looking at moving these trucks from here into the Chicago area, into the Midwest. That's what they're trying to move into, where the volumes are higher, maybe down to the Memphis area.
But those are increasing rejection rates, though, so there's potential for increased rate pressure, correct?
In the blue areas here, yes. The red areas down, we will move from red to blue.
Right.
That's what we want to kind of look for. Red to blue, move your trucks to the blue.
Gotcha.
On the West Coast over there, we still got a lot of white. Those markets have been pretty well mute. There in the mountainous areas of east of the West Coast, Salt Lake City area, we've seen a lot of growth in those markets as well. Okay. So blue's good, red is declining, move your trucks to the blue.
All right.
I want to dive into one market though. Let's look at Wilmington. Wilmington is very interesting. We've seen a storm come through there, and this is a good way to look at the effects here. We're about a week after the storm right now, and coming into the storm, we're going to look at the outbound tender volumes first, and then we're going to compare the drive-in tender rejection rates, the outbound versus the inbound. Okay. So here we have our
blue line is the tender volume index.
Yes. And my red line is outbound, and the yellow is inbound. This is drive-in only.
Okay.
So moving into the storm, this is where the market was right here. Okay. Of course, when the storm starts to move in, people start to evacuate, shippers start closing, and we see a very drop in volumes for our outbound tender volumes. That was expected.
Big drop in volumes, increasing tender rejection rates going into the market.
Yes, into the market is increasing. But see, as these trucks start to move in, we see here, this is our outbound. These are trucks trying to get out of there.
Right.
Give me some freight, give me something. I'd like to drive out of there with a load versus drive out of there empty. So they're willing to drop their rates, at least just to pay for the fuel and get their equipment out of that area, or they might just end up moving them out of there. And if they're just avoiding the area, they might move, 50, 100 miles in and then come back. Right. And that's kind of what we've seen with our tender rejection rates for outbound. They were just going down, down, down. And right now, with the trucks heading into the market for relief efforts, of what relief efforts they are having, it was a hurricane. It wasn't too strong, but there was damage done. There was actually a lot of tornadoes that hit the area before the hurricane came in.
Yeah, there were.
Between Myrtle Beach and Wilmington,
That's right.
Had a lot of 3 or 4 or 5 tornadoes hit, which caused a lot of damage. So as these go down, drivers are reluctant to go into areas that have a lot of damage, storm damage. So when they do, they start driving their rates up because they know the outbound rates are going to be very low. Okay. This is where we see our inbound tender rejection rates coming up. They peaked up at almost 10%, and they've settled a little bit back to about 8.5%. So here's where we see, if you're going into the Wilmington market, they're increasing their rates.
The rates.
If you're a broker, even the Wilmington market, but also look at all the coastal markets, Savannah, Charleston, Wilmington, you need to increase your rates a little bit because your outbound rates are going to be very low. So a carrier's going to know this.
Right.
They're going to charge you going in and then look for a load to get them out of there.
Volumes have started coming back up just in time for another storm potential to hit next week.
Oh, I hope not. But it's always there.